It's kind of like there are two different economies operating at the same time, right alongside each other. One is this massive global machine moving just insane amounts of money at the speed of light. But the other? Well, the other one runs on a hidden currency, a currency of trust that millions of people rely on just to get by. Today, we're going to pull back the curtain on how these two worlds really shape our own.
And it all really starts with this giant paradox. We've built a financial system that can zap trillions of dollars across the planet in the blink of an eye. So how is it possible that at the very same time, so many people are completely locked out? Unable to build a real future? That's the big question we're digging into.
Okay, so first let's talk about that global machine. This is the world of formal finance, a gigantic, interconnected web that powers, well, pretty much everything. Global trade, investment, you name it. But here's the wild part. It's not really a world of physical cash. It's a world built on pure digital information.
To really get a sense of the scale here, just look at the foreign exchange market. Every single day, not a week, not a month, every day, it moves over $7 trillion. And none of that is getting stuffed into crates and shipped around. Nope, it's just a torrent of data flowing through this incredibly complex global network.
And that really gets to the core of what modern money is. When a company in one country pays a supplier in another, no actual cash gets on a plane. What happens instead is a bunch of secure digital messages fly between banks, basically just telling them to update their spreadsheets. It's wild. In this world, money is information.
So what does that actually look like? Well, you can think of it like a four-step digital chain reaction. It starts when your local bank gets the payment order. Then it uses this super secure network called SWIFT to send a message to a bank in another country. That bank gets the message, updates its digital records, and poof, the supplier gets credited. The money never physically moved. It's a system built entirely on trust and data.
So when you piece it all together, you can see this formal system has a really clear identity. It's totally impersonal, it's all about the data, and it's built on a network of huge banks. The whole thing runs on our trust in these big institutions. And right at the center of it all, the US dollar. It's pretty much the default setting for the entire world.
Okay, but what happens if you can't get into that system? What if you're on the outside looking in? Well, you turn to another one. And this is the second economy we're talking about, one that runs on a completely different kind of fuel, the currency of human connection.
There's actually a term for this. It's called social capital. And really, it's the wealth that exists in our relationships. It's the trust you have with your neighbor, that unspoken understanding in a community. It's the stuff that lets us work together to do things that, honestly, we could never do alone. Now, not everyone is sold on this idea. Some academics argue that even calling this capital is, well, misleading. They say it glosses over a really hard truth. Having actual financial capital, we're talking cash, credit, real assets, gives you advantages that no amount of social connection can ever truly replace. And that brings us to a head-to-head comparison. Let's just put these two systems right next to each other so we can really see how different they are and why that difference matters so much.
Wow, here it is, laid bare. On one side, you've got the formal system. It's global, it's impersonal, and to even play the game, you need assets, you need collateral. But on the other side, you have the social system. It's local, it's personal, and it runs entirely on trust and giving back. I mean, these are two completely different worlds operating by two completely different sets of rules.
Okay, so what does this actually look like in the real world for real people? Let's take a look at a case from Ethiopia to see how this all plays out on the ground. This is where the theory gets very real, very fast.
Here's the puzzle. Why is it that the very people who grow the food and run the public services, literally the backbone of the economy, are so often the ones who are the most financially vulnerable? It's not just about what they earn, it's about the system they're forced to operate in.
For so many people, the formal banking system is basically a locked door. If you want a loan, you need collateral, like a house or land, that most people just don't have. The application process is a nightmare of paperwork. And let's be honest, the banks are often designed to serve big businesses, not a farmer with unpredictable income or a teacher with a fixed salary. You're just seen as too high risk.
When the official bank tells you no, where do you go? What do you do? Well, you turn to the oldest bank in the entire world, your community. You turn to each other.
This is social capital in action. People literally build their own financial systems. You see things like the E-Cube, which is this genius rotating savings club where everyone pools their money. You see informal lending between friends, family, local lenders. Whether it's a medical emergency or just trying to start a tiny business, these social networks are the absolute lifeline. And
And this is the huge but. Here's the critical catch. These informal systems are absolutely essential for survival, but they almost never build long-term wealth. It's like they're a life raft. They'll keep you from drowning, for sure. But the path to real prosperity? That's on a shore that's just incredibly hard to reach from the water.
And that brings us to the real takeaway from all this. This isn't just about two systems competing. It's about what we, as a society, decide is truly valuable. It's about rethinking what capital even means and what it really takes to create genuine opportunity for people. At the end of the day, the line that separates poverty from prosperity, it isn't just your income, it's your access. Can you tap into that global, institutional system of finance, or are you completely reliant on the local, relational system of your community? The answer to that question, more than almost anything else, can decide your entire economic destiny. And that leaves us with a really tough, provocative final question. What's the answer here? Is the goal simply to get everybody into the formal system, no matter what? Or is there a way to strengthen and better value the incredibly powerful systems of social capital that people have already built for themselves? The answer is, well, it's not simple at all, and it really does reshape how we think about everything: money, community, and what progress even looks like.